Hey, welcome to the exchange. Let's take another look at Roblox. They just reported earnings. I think there's some really interesting things there on the positive side. Also, a couple red flags as well too. But let's take a look at it. So this is a model I built for Roblox. As you can see here, top line revenue of I'm basically projecting $2.875 billion. It's a little bit softer. I want to see more like $2.9 billion up, but they're kind of on that right glide slope overall. And the revenue growth rate overall year over year has maintained a pretty high level, even kind of in the post-COVID environment we're right now, which it should maintain that level as they grow out internationally as well too. And they see a lot of international expansion. So this is the revenue by quarter. This is also from their investor presentation. So as you can see here, the solid growth rate. Last quarter, the last earnings report, I mean, it did dip though too, but it's important to read the actual footnote on the very bottom down here. So in Q1 of 2022, our estimated user life changed from 23 to 25 months. Based on the carrying amount of deferred revenue as of December 31st, 2021, the change resulted in a $82.5 million dollar revenue decrease during the 3 months ended March 31st, 2022. So pre this accounting change, the user life change, etc., this number right here should be about 82.5 million higher. So you can see there it'd be well above 600 million right there at that point. So it's actually revenue actually did increase, quarter over quarter. So this this dip right here looks, I know, it looks really scary. It's actually a little bit artificial due to the accounting changes right there. Now, you have to be careful here, but changing out your useful life of some of your assets, potentially some of your products you're selling. I mean, this could be a way to pad future revenues or pad your, basically your accounting statements in general. But I don't think that's what this is. I mean, if we see changes again, let's say like a year from now, potentially it make it from 25 to 36 months, that could be a red flag for, hey, I mean, not accounting fraud, but accounting shenanigans behind the scenes, trying to basically pad their earnings statements. But we'll see in the future what's going to happen. So this is daily active users. Basically, it's just like someone logging into the actual Roblox application or platform itself on a daily basis. What's those numbers? Basically in millions per quarter. So right now we're seeing 54.1 million. It's actually a record quarter of any quarter, even during COVID for Roblox users. I mean, they've had steady like overall daily active user growth rate. I mean, this to me is a very positive sign overall. And you see obviously like the big COVID bump right there where it's like, hey, they had the massive growth. Now that's going to slow down post-COVID timeframe, but what really surprised me, I thought this might flatline more in kind of the post-COVID environment though, but it's really maintained its growth rate. I mean, I think by end of year, we should be at 57, 58 million, daily active users at a minimum potentially. I mean, it wouldn't shock me if we're at 60 plus million potentially too. So this is a very strong growth rate, and part of it is domestic US, but also internationally too. It's growing very, very strong across the globe. So this is one of the most important slides, I think, of the entire deck right here. And what this shows you is monetization per user. So how much money per quarter a daily active user would use or spend basically per their quarter. So right now it's $11.67. It's been decreasing roughly, quarter over quarter. We had a big spike during the holiday period, but year over year, I mean, negative 25%. And this is the problem. And it's kind of like Twitter in a way too, where you have a massive platform and, massive engagement, massive hours spent on the platform, but you're not monetizing very, very well, which this number should go up though too. There's plans internally. They talk about the earnings call, the way to monetize more effectively, basically add revenue from their actual user base they have. But again, if this goes sub 10, I'd be like almost like a red flag at that point. It's like, hey, they're not monetizing well, or monetization is collapsing. And at that point, the stock probably will drop down pretty fast too. But I think the opposite is going to happen. I believe this will go $12, $13 plus potentially later this summer and this fall. So overall gross margin right now is maintaining roughly about 75%. I think it might decrease a little bit in 2023 and beyond a little bit, but overall, I mean, it's a very, very healthy, almost like a SaaS margin in a way. I mean, very high operating leverage, which is fantastic. Looking at the actual OpEx expenses, it gets a little nasty here. So developer exchange fees actually, what basically is operating expenses actually decrease, which is good for Roblox, but it's also bad in a way too, because like on any kind of social platform you have, like a marketplace platform, like whether it's like YouTube or basically you have like content creators and content consumers, etc. I mean, you really have two methods here. You can either go full blown to the content creators and pay them healthily and make sure they're very, very happy, so thus they create good content for your consumers. The problem there though is it sucks up your profit margin though, so your profit margin will decrease massively. So or you could do the opposite, where you can be like, hey, all in on the consumers and the content creators, forget them, don't even care about them at all. The problem is short term, it'll increase profits, but long term, it can kill your platform overall too. That's why that balancing game there is very, very, very important. So this is one of those things, this is one of those companies where if I see content or developer exchange fees or basically payments to developers actually go up, I wouldn't be that mad about it, because it shows, hey, they value the developers, they're encouraging developer experiences. There have been some stories out there of developer nightmares and some of the PR behind the scenes, where it makes it very hard for developers to actually basically monetize their games effectively. And there's also some IP stuff going on behind the scenes too. But yeah, it's definitely a red flag for me potentially. For trust and safety, this is the actual data centers, the technical centers they actually need for their actual cloud, and then also content delivery networks out there too. This is more of a fixed cost than a variable cost. So this is one of those things, as a platform grows, as your basically active users increases worldwide, you're going to have higher infrastructure costs no matter what. Also, I do want to note here too, this actually baked in this cost right here for an annualized basis. There's heavy depreciation and amortization I put in here. So it's roughly, I mean, this actual cash number is probably roughly about 470, 480, somewhere in that ballpark on an actual pure cash basis. So looking at R&D here, you can see it's $900 million, which again looks like a massive growth rate versus 2021, but it's really not that bad. I included about $300 million, which they annotated about the stock-based compensation. So it's like a non-cash expense in a way. So the actual growth rate is roughly $620 million in 2022. So for 2021, we're looking at roughly $100 million of extra growth. So we're roughly 20-25% there. We're looking at the revenue growth rate at 50%. They're still below the revenue growth rate. So it should get better with scale as they scale out in the upcoming years. Overall, G&A expenses, I mean, small uptick there. I thought it was pretty healthy versus the revenue growth rate. Sales and marketing, upticked again too. I mean, it was higher than the actual revenue growth rate though, but it's also a small bucket. Like it's not that much money comparatively. I'm saying $143 million this year, which again, for the scale of Roblox itself, it shouldn't matter too much. But notice, look down here. So the actual total OpEx expenses versus the revenue, you see, I mean, it's almost 100% exactly. This actually might be the peak period where OpExes are maxed out versus revenue base. Assuming revenue grows in the future and they have better monetization, I mean, we should see OpEx as a percent of revenue actually decrease, going forward in the years as, again, kind of that scale and the operating leverage, going forward. But again, we'll see if it works out according to this model, they'll be absolutely fine. If the DAOs all of a sudden decrease or monetization basically falls below that $10 per quarter mark, they're going to have some serious problems with basically cash burn rate, etc. But I mean, overall, you can see here, like net income, I mean, it's going to be very negative overall for the years forward. Now, this does include some stock-based compensation there too, so the actual numbers are lower than this for a cash burn basis. And they have roughly right now, I think, $3 billion in cash right now, so they're fine cash-wise, unlike some other companies I actually did research on. So I mean, I took here was just FY28 operating income. I threw a EBITDA multiple on it of 12, which might be a little bit high. I mean, 9 might be the better bet potentially, but this is what I think it's worth. I'll explain a little bit of that later. But yeah, cash and cash equivalents, long-term debt, market cap, etc. Stock comp dilution, I assumed 1% per year. My stock value I have right now is $56.48. So again, it's what's well below that right now. And really, the question I have to ask myself is this: who are Roblox's true competitors out there? I mean, you might say like Unity Software, you might say Epic Games who makes Fortnite, but really it's a war for eyeballs. And this demographic they're actually going after is it's younger children, preteens, etc., 9 to 13-year-olds, etc. And really for that demographic, I mean, you're fighting against like Disney Plus, Netflix, most of all TikTok, for example. I mean, these are massive platforms, and Roblox is actually doing very well with the actual the war of eyeballs, penetration rate of users, actually active monetization and or hours engaged, etc. So the question I have to ask myself is like, I mean, would you value this more as a gaming company or as an entertainment company or an entertainment platform? In some ways, Roblox resembles more to me like YouTube than it does, some other game manufacturers out there too. So I mean, that's a question you have to ask yourself too. And if you believe that case, then the stock is well undervalued. If you don't, then it's probably at roughly a fair value, maybe slightly undervalued potentially too. So I'll close on this very final slide real fast. So this is the hours engaged by region and by age. I want to point out here, look at the actual growth rates for US and Canada by region. I mean, negative 11%, negative 10%, obviously very bad there. But really what's happening is you're getting the US, it's just saturating the market right now. So we had a big COVID spike. Now it's going a little bit under, and it's going to eventually level out and basically a mature market overall. But I mean, look at Europe. I mean, it's 20%, 12%. I mean, APAC, there's 112%, 104%. I mean, just massive growth in this region. Rest of world, 39%, 26%. I mean, these are still strong growth numbers overall too. So even though the U.S. market matures and gets kind of more stable, I mean, the rest of the world is going to catch up basically the next 2, 3, 4 years down the road. So I made this little chart real fast with some of the data they actually had. So what this chart is it's basically over 13 age and also daily active users. This is by quarter. So in first quarter 2019, what you see here is you have 6.4 million users over 13 for total daily active users of 15.8 million. So basically saying 40% of our users are over the age of 13. But look at this right here. So as we go quarter by quarter, I mean, it's just increasing. What this shows me is the platform itself is very sticky. I mean, you would think, hey, Roblox is kind of like a younger kids game, preteen game, etc. But I mean, it's getting more and more sticky even with the older crowd. So as they get older, they're still playing either a 14-year-old, 15-year-old, 16-year-old, etc. Which that to me is fantastic because basically your target demographic grows from 6 and under or 6 and above to all the way to 16, 17 potentially too. So it's just a massive range there of spending power and monetization power potentially behind the platform. So another thing to mention too, they mentioned on the earnings call as well, is they're actually trying out with ads in the near future. They didn't give an exact timeline yet, but I mean, this could be a massive ad platform, especially with advertisers trying to shape brand loyalties, brand preferences at a very young age, which you can argue whether that's good or bad or not, but it's going to happen. And so I think if I had to guess, by 2025 and beyond, you're gonna have a massive revenue stream from ads itself as it grows. Kind of like Meta and Facebook did in the early kind of phases, where it's like, hey, you got the platform out, didn't have ads for a while, all of a sudden you monetize it, and it's worth like, hundreds of billions of dollars, and it has massive amounts of revenue overall too. But this is a massive platform. It's also a global platform too. So I really see that ad content really as potentially being a massive revenue stream for them, and really that's why I see kind of the DAOs and the DAO's monetization per user base is not it's not as important right now. Whereas later on, it could become a small cherry on top to the actual massive ad revenue they're sitting on. Hey, but that's Roblox. Very, very interesting company. Long term, we'll see where they go. Hey, be sure to sub, like, comment down below, and that's the exchange.